Greetings and welcome to the lesson. The subject is financial accounting. We are studying the preparation of financial statements of companies. And today we move to the statement of cash flows, which is one of the three primary financial statements that provides a snapshot. The cash flow statement provides a snapshot of a company's cash inflows and outflows over a specific period. It complements the income and the balance sheet. It complements the income statement and the balance sheet by focusing on the company's liquidity and the ability to generate cash. Now, candidates, we are studying the company accounts, and there are three primary financial statements that companies are required to prepare. That is the statement of income, statement of financial position, and statement of cash flows. Those are the three main primary financial statements. So the statement of cash flows is one of the three primary financial statements, and it complements the income statement and the balance sheet by focusing on the company's liquidity, by focusing on the company's ability to generate cash. That's why we are referring to it as the statement of cash flows. That is cash inflows and cash outflows. Cash can only flow within or without. You understand? So the International Accounting Standard number 7 requires entities to present a statement of cash flows as an integral part of their financial statements. So companies are required to prepare the income statement in compliance to the International Accounting Standard number 7. And the statement of cash flows provides information about the historical changes in cash and cash equivalents of an entity. Statement of cash flows. Statement of cash flows, IAS number 7. By now you are all aware that accountants are required to prepare financial statements, financial information according to what the standard stipulates. Standard number 7, International Accounting Standard number 7 requires that companies should prepare the statement of cash flows, which should be part and parcel of the financial statements. So in this lesson, we're going to learn how to prepare the statement of cash flows. By the end of this lesson, you should be able to prepare a statement of cash flows. And cash flows, candidates, are classified into three main categories. The International Accounting Standard number 7 mandates the classification of cash flows into three primary categories. classification of cash flows. Are you following, candidates? We are studying the statement of cash flows. As per the International Accounting Standard number 7, I've firstly said that entities are required to present the statement of cash flows. And in presenting this statement, these cash flows are to be categorized into 3 primary categories, what we are calling classes or classification. And the first one is the operating activities. Operating activities. That's the first category. When preparing the cash flow statement, the first category of cash flows is what we are referring to as the operating activities. Now, cash flow from operating activities indicates the amount of money a company brings in from its ongoing regular business activities, such as manufacturing, selling of goods, providing service to customers, operating, okay, the core business. Cash flows that are obtained from the normal activities, the core activities, the day-to-day activities. When a company sells goods and receives cash, that is cash from operating activity, the regular business activities. So the operating cash flows focuses on the core business. It solely focuses on the company's core business activities, and it measures the actual cash generated or used in operations. You understand? So that's the first category. The first category. Operating activities. The second category of cash flows is investing, cash flows from investing activities. Cash flows from investing activities. Now, cash flow from investing activities is a section of the company's cash flow statement that shows the cash generated by or spent on investing activities. Cash generated by. Cash generated by. This is money that comes in or spent on investing activities, on investment activities. And that has to be during a specific period. So the investing activities, cash flows from investing activities focuses on the company's long-term investments. Mark the word investment. Focuses on long-term investments. Focus is on long-term investments. The focus is on long-term investments. It measures the actual cash generated or used in investing activities, like buying of fixed assets. You understand? Investing activities. Investing activities. Now, it's important, candidates, as you are moved, try just to get the understanding right away. Get the understanding right away. Don't come to this class with that mind that you will take notes and revise. You can get understanding right away. Okay, that's why we are making it a bit straightforward. Don't have that mind that you will write notes, then you will revise, then you will understand. It doesn't have to be that complicated. Statement of cash flows. We are talking about a statement that shows you the flow of cash of a company. And the cash can flow inside the company or outside. So we have cash inflows, the money that comes in, and cash outflows, the money that the company spends. That's why when we classify these activities, we have operating activities, we have investing activities. Investing activities, you can receive money or spend. That's why we are saying cash generated by investment activities, or cash generated or cash spent on investment activities. And there are many types of investment activities, like purchase of long-term assets, e.g. purchase of long-term assets. When long-term assets are purchased, like these are non-current assets, furniture, land, buildings. When you purchase, that is an investment activity. And when you purchase, money flows out. You spend. Sale of long-term assets. You can either sell or purchase. When you sell, money comes in. So in the income statement, you will show that is an inflow. And candidates, the information that you are provided is just in English language. You are told during this period, the company sold motor vehicles amounting to 10 million. So that means that is an investment activity. So you will record it under investment activity. So the standard requires us to categorize these activities into operating activities. So it's important for you to know what are these investing activities. And I'm giving examples: purchase of long-term assets, sale of long-term assets, investment in securities, investment in securities. Securities, these are things like bonds, like shares, all right, and so on. Buying of stocks, buying of bonds, and other securities like derivatives, and so on. Dividends received, dividends received. When you receive dividends, that means that the company has invested in other companies. So when you invest in another company, you receive dividends. That is an investment activity. All right? Cash received from investment in other companies. That is an investment because you've invested in another company. It's an investment activity. So the dividends you receive is also part of the investing activities. All right, dividends received. You also have interest received. Interest received means that you've advanced money, like debentures. You've bought the debentures in another company. So when you buy debentures, when you invest in debentures, then you receive interest. So that is interest income that is earned on loans or other debt instruments. You receive interest if you have advanced another entity money, all right, loans and so on. So that is investing activity, the second class of cash flows. Then number three, the third one, is what we call financing activities. Financing activities. These activities allow the company to receive money, or we can say just cash flow from financing activities. Cash flow from financing activities, because here we have cash flow from operating activities, cash flow from investing activities, then there is also cash flow from financing activities. Now, cash flow from financing activities is a section also of the company's cash flow statement that shows the net flows of cash that are used to fund the company, financing to fund the company. And it essentially tracks how a company raises and spends money through various financing activities. And it focuses on the company's long-term financing needs. Company's long-term financing needs, like repurchasing of equity, e.g., repurchasing of equity. These are just shares. Equity, we are referring to shares. If a company buys back its own shares, that is a financing activity. Issuing of equity. I needed to begin with issuing of equity. When a company issues equity, shares, that is a financing activity, because the shares are meant to, the money that is raised from issuing shares is meant to finance a company's, a company's needs. You understand? Paying dividends. This is a financing activity. Dividends represents the return on the shares. Okay, when the company pays dividends, it's paying the investors. People who invested or entities that have invested in the company are paid dividends. That is it is a financing activity. Paying of dividends. Okay. Issuing of debt. Issuing debt. Like debentures, when a company issues debt, debentures. That is a financing activity. Issuing of debentures is a financing activity. Issuing of equity is a financing activity. Repurchasing of equity is a financing activity. Repaying debt is a financing activity. Repaying of debt. This involves borrowing money by issuing bonds or taking out loans. That is issuing of debt. Repaying debt involves paying back principal and interest on debt. So these are the three classifications of cash flows. If you are to prepare a statement of cash flows, you are required to present it under the three categories. You have a section for operating activities, there will be a section for investing activities, and finally there will be a section for financing activities, and it has to be in that order. You begin with operating activities, then you have the investing activities and the financing activities.